My name is Marcelo Cajias from the PATRIZIA PLC. We're a listed company in Germany, and I am in the field of research. And in the next 15 minutes, I would like to talk about two main aspects in the Nordics. First one is the impact of demographics on the economy, and the second is an outlook of real estate markets, and also on the main macroeconomy. So let's get started. During the last 20 or 30 years, the demographic development in Europe has been positive and has been stable. But today, Europe is facing a main demographic challenge with an aging population. And if we look at the forecast of the Eurostat for the Nordics, we see that within the next 10 years, the population growth will be of about 10%. In absolute terms, we have a population increase of something about 2.3 or 2.4 million persons within the next 15 years. And if we look at the distribution, we have growth rates of about 16% in Norway or 10% in Sweden. So this is a huge demand shift within the next 15 years. And this is, in comparison to other countries like Italy or Germany, are really good positions when trying to decide where to invest. And especially, this is the result of a really active social agenda started in the late 80s with two main results. First, a positive net migration, and secondly, a positive and stable fertility rate of about 1.7 child per woman, above the European average of 1.5. If you ask me what is a 0.7 child, I don't know what it is, but we are above the European average in the Nordics. And just from an investor's perspective, the population growth is important, but what about the composition? What about the structure? And what about the geographical distribution of population, which is also important? So let me show you now that quantity is not everything and that composition matters. Now, I present you the old and the young dependency ratios for all these countries, these 8 countries, and that is measured as the group of population between the younger than 14, divided by the working population, that's the young dependency ratio, and respectively the old dependency ratio. So leaving Germany behind, we see a significant increase in the old dependency ratios in the Netherlands, France, and Finland. And that means that in 2010, for example, in Finland, we see that 17 persons were dependent on 100 workers. Whereas by 2030, we will see an increase in the old dependency ratio of about 10 percentage points or 25. That means that in 15 years, 25 old persons will be dependent on 100 workers. So that is from an investor's perspective not a really good position, but the good news is that the increase in the old dependency ratios in the Nordics will be compensated by stable or young dependency ratios. That means that the net migration and the stable fertility rates will lead to a very good position in terms of demographics. And if we look now at the working population is able, or is the group that generates value and distributed across young and old persons. That means in terms of education and pensions or the health system. So if we look at the distribution of the population in the Nordics, we see a really skewed geographical pattern. Leaving Denmark behind, we see that people or that inhabitants are concentrated mainly in the south of Sweden, Finland, and Norway. And just to give you a number, almost 20% of the population lives in the main regions of the 4 capital cities. So we have a different distribution and concentration in comparison to other countries in Europe. And if we look at the urbanization trends during the last 30 years, the main areas have been growing continuously. And the question that arises at this moment is whether the 2.3 million persons coming in the next 15 years will be concentrated in the rural or in the urban areas. And as we see the population growth in the next 15 years will take place in the main cities, in the main agglomeration centers, and we see that during the next 14 years, 66% of all regions in the Nordics will have a population increase. And a very important, in my opinion, a very important fact, if we look at the distribution of the growth rates, we see regions in the Nordics with a growth of above 10 or 12%. And this is very important. This is very important because this has three main consequences on the economy or on the economic business cycle. First of all, the labor supply in these regions will increase. And this increase in the labor supply will be directly transferred to the office market, to the office markets in these regions. Secondly, the increase in demand will lead to higher levels of consumption in terms of retail trade. So we will have an active labor market, an active retail market, as well as, and lastly, we will have an increased demand by more than 10% in the demand for housing. So if we talk about demographics and why the Nordics are really very attractive and an interesting region, we see that in regions with high agglomeration of persons, with a high concentration, the office, retail, and housing market are or present really good opportunities for investments. But location is not everything. Look at the structure. And we see that the pressure on the working population will also increase. We saw that the old dependency ratios are increasing or will increase. And we see that in rural areas, in non-urban areas, that these areas will shrink over time, and that this development will lead to a decreased level of population in these areas. And the pressure on the working population is mainly distributed or located in Finland and in the main cities. But to conclude with the analysis of the demographics in the Nordics, in our opinion, real estate is a local business. But I think today real estate is a local business in a healthy environment on the long run. And we're looking now at the economic development, or what's going on in terms of economics. We decided to analyze the economic business cycle, perhaps from a different point of view, and we integrated also this view that location is important and that the structure is important. So we decided to create three groups and see what happens. We created three groups of cities. We clustered small, medium-sized, and big cities, and look at the industry composition in the Nordics, and find out that in small cities located perhaps in the coast, but in small cities, the economic development is high when the industry in these regions is highly diversified. That means that the primary and secondary sector are the main drivers of the whole GDP. In contrast, we found out that in big cities, in the main regions, the economic wealth or economic development is higher when the industry in these cities is high concentrated on the tertiary sector. And this has, in my opinion, this is very important because of the following. The tertiary sector is in charge of services, or is mainly on services, financial services, retail trade, and also on research and development. And one of the main characteristics of the Nordics is the high expenditures on research and development. We are, in our opinion, and this is a known fact, I think, that Nordics are a really competitive region, and the expenditure, and just to give you a number, the expenditure excluding Norway as a percentage of GDP in research and development is about 3.5%, and the European average is something about 1.5%. So we're talking about a really competitive and a really innovative region that expends a lot of money in development and research. And for us, the regional business and the regional knowledge are key drivers and are very important when trying to identify regions with a potential or with a demographic potential within the next 10 or 20 years. So, if we come to the real estate market, excluding the residential market in Denmark over the last years, we see, first of all, stability. We see stability, and stability means a low volatility in the returns. And the recovery in the residential market in Norway has been slow. And today, I think that the residential market in Denmark is winning on dynamic. It's gaining a momentum. And if we look at the residential market in Sweden, we see our outperformance in comparison to office and retail properties over the last 20 years. And also, we see that the financial crisis, or the European crisis, has not really affected the development of residential and office markets in Norway and Sweden. Furthermore, we think that after the financial crisis, the retail sector in Finland has lost dynamic, and the retail properties are losing speed. And today, we are able to see that a residential market is outperforming slowly the retail and office markets in Finland. But again, I think main characteristic is a continuous growth in the total returns and a low volatility in the total returns, which is essential, I think, for investments in these regions. But don't forget, location and regional knowledge is important. So let me now give you a short outlook of the economic business cycle in the Nordics. We have a main consensus that the macroeconomy is going to be better in the next year, and in the next year we see that the economic development, we see an expansionary economic development in Sweden and Norway by more than 2% per annum, and that the main problem in Sweden now is inflation or deflation, and I think the Riksbank is now really actively working on getting a long-run inflation rate of about 2%. And the next factor that is important for us is that Denmark is coming out from a negative or from a contraction area, and we expect a relative moderate growth of about 1.5 or above 1% per annum. One of the major challenges this and next year in Denmark will be unemployment. We are dealing now with high unemployment rates. However, we see that in this year and the next year, we see a positive growth. Furthermore, in Finland is very linked to the whole European Union, and as export-driven country, the recovery in Finland is highly dependent on Europe. And we saw, I think, the next 2 quarters that the development in Europe is gaining momentum. And for this reason, we see also that economic development in Finland will be positive for the next year. And to finalize, to conclude, I think the Nordic regions offer a lot of investment opportunities. And as I already say, don't look only on the quantity. Look at the composition and look at the location for the long run, or for your long run investments.